Okay, how about now? Yes, okay, there we go. There's some volume. I apologize. Every time I go here, look, you can see I'm not at home. I'm out in the city again. So because of that, I always have to retune all of my settings. But we're live. Boom, ladies and gentlemen. Thank you for joining us today. I apologize for the little ups and downs we get every time we move. You're trying to always constantly reconnect everything, and now I think we got to figure it out this time. So. One of the things we're going to be doing is taking a look at Bitcoin and talking about the potential for redistribution. Now, we've gone over this a few times, and one of the things that we're almost always interested in is when the masses are going one direction, we usually try to go the other. So one of the interesting parts is that now that everyone's into Wyckoff phase analysis, most people think that we're in phase C of accumulation and about to go higher. And one of the most difficult aspects about the middle of the market is that these time frames are so short and therefore also less reliable because of it. When we were charting the long-term accumulation pattern, it was extraordinarily valuable for us to be doing so because it was like a 1,200-day accumulation pattern, and that's very reliable. Whereas here, it's only 40 days, we're in phase C, it could go either way. People are like, oh, technical analysis doesn't really work. It's like, well, no. You have to know where it's the most valuable, and in the middle of the market, it's not the most valuable technical indicator. It could go either way. So what we're going to do today is we're going to take a look at it potentially going either way. Okay, boom, there you go. So Bitcoin on the 3-day chart right now, actually, that's pretty nice to see. Big long time frame. So when we are charting accumulation down here with our phase C spring on the 11th of March, that's a really reliable technical indicator. In fact, it was so reliable, it yielded us like 14 to sometimes 100 plus X gains on different tokens that we were following. Fetch and Matter were prime examples of that. Now, in the intermediary of the market, you have all these new people learning what Wyckoff is, and it becomes significantly less relevant on these time frames. So phase C, which is what we think this spring was here, actually this looked good. This was a nice potential spring. An enormous amount of supply came in, equal to that of the primary shakeout. That was nice. But the downside is this starting to look more and more like a redistributional chart. So what I want to do is go to our Twitter account, and we're going to go over a few things here today. I'm going to pause this in the background. So what we're looking at is redistribution, and there's two really easy ways to see that this is of a higher potential than accumulation itself. So I want to give a shout out to one of our private members, Glasswalker. He's been doing these fantastic charts. He was the one that did the potential for accumulation. Here you can see redistribution, this kind of jump up and then this slow curl over. So shout out to Glasswalker, at Freddy Octopus. You can follow us on Twitter here. But what's the point of this? Okay, well, in redistribution, it's usually what comes after a large-scale distribution. So if we know that we saw a really nice rounded top distribution here, generally you can assume that you might be seeing a redistribution here. And not only that, this looks like a Head and Shoulders or something else, if you've got a dirty mind on Monday. And we've seen parabolic tops that do this quite often too, where you have these big head and shoulder moments, and then it breaks down. Now, the breakdown would likely be to around $17,000 potentially, so at least be prepared to take that downside dip if that's what comes of all this. Now, one of the reasons why these intermediary market cycles are significantly less important is because they don't take up as much time. So you have all these newbies who are like, oh yeah, you can't really rely on technical analysis because, it's going to go either way. It's like, well, yeah, that's the shitty part about showing up in the middle of the market, is that you have no idea to the reliability as we did back here when we were like screaming it was going to go full bull, especially after we broke past $9,000. We're like, this is it, ladies and gentlemen. We're going for a bull market run here. And that's exciting because you can rely on that data. Whereas here, you're looking at a 6-hour chart right after a large-scale distribution. We're right in the middle of the market cycle. It could go either way. Now, the on-chain metrics actually look pretty great, right? So we know that distribution and redistribution are usually cycles, one after another. But the on-chain metrics actually look pretty good. And that's what's difficult about this particular assertion of like, oh man, it could really go either way, is we see large-scale holders accumulating and supply leaving the market. People like Michael Saylor buying hundreds of millions of dollars of Bitcoin in these areas. Kathy Wood and ARK Invest buying tens and maybe almost up to $100 million worth of Bitcoin and Ethereum at these levels as well. They've started their secondary accumulation process. And we go through and we look at some of these other areas like the stock to flow model, the stock to flow deflection, hash ribbons, reserve risk ratio. And we actually see in general, this is not a bad area to accumulate, even if there is further room to downside. So the thesis on the long-term result when there's an either way process, you go, well, great, it's the 11th of the month in 6 days, and that's my regular buying month. So I'm just going to buy more, and I'm going to basically ignore the price because over the long term, that's the best investment strategy. Now, again, the difficult part is you want to know as best as possible where we are in the markets. And these areas back here, when the Bitcoin bull market was first starting, this was such a sexy accumulation channel, right? Like you can't go wrong with that basically. Whereas here, where we are now on these shorter time frames, it's significantly less reliable. The upside to downside relationship is almost equal. And on chain, we're getting metrics that basically say we're in a good area to accumulate, right? So we go to our reserve risk ratio. We look where we're sitting for Bitcoin, and we're just above the buy area. The buy area is sitting basically at $20,000. If we scroll out a little further just to show the 2017 bull market or 2017 2018 bull market, you can see that we had a big uprise and capitulation downwards back almost into the reserve risk area before going higher. So it's like a flip of a coin basically to either go down to 17 grand or to jump up to 50 grand. And that to me still represents a good area of accumulation, right? Like once we get to this mid area, same thing, your consistent strategy should be the same. When you see these massive spike downwards like we did on March 11th, the day they declared the pandemic officially, that was an area to like throw the house and the chickens and the kitchen sink at an entry, right? And again, we can see that on the charts on the long-term time frames, whereas on the short-term time frames, your data can change overnight. So, I would be watching this. It looks like we'll get a rising wedge, and then it could be a breakdown even further here. So, even though this spring does look healthy, the fact that we couldn't get above the POC the other night was not great. So here we go, three tries up against the point of control, and couldn't move above. It's not looking healthy, and it leads more to the idea that yes, we're probably headed towards a redistribution, very much so like what Glasswalker has shared here. And on the front of this chart, you can find a lot of this stuff for free by typing in redistribution, and understanding that effectively, even if we do see this, like where's a good example? Oh yeah, up here. See redistribution pattern 4 here, how it broke down and then quickly bounced right back up, almost looking like this would now be the spring of a larger accumulation channel. We may witness something like that with Bitcoin, where you have a quick dip down to 2018 and just fires right back up to like 39,000. A lot of this will be liquidations, retail hands, shaky players, people that don't have a lot of money and don't understand that accumulation is a consistent strategy and almost should exist regardless of price. So where does that lead us? It leads us to looking at the rest of the markets. The volatility index smashed down to the bottom. We've been constantly falling in the volatility index for quite some time. That's nice to see. The NASDAQ, and this is where things are a little confusing for me. The NASDAQ has broken through the top of its trading range and continued to create new all-time highs almost every freaking day. Even the S&P 500 was sitting at basically new highs this morning. So for those of you that are in the private den, you will recognize we've been charting this for the last few weeks here, this kind of rising channel that the S&P 500 is producing. So I think what's important to recognize is that we're not isolated in the Bitcoin markets, and if we do see a big turnaround in the S&P 500, it would bode negatively for Bitcoin too. So we might see a kind of an intermediary top. This could be viewed as an upthrust, and then a distributional moment could come all the way back down to 390. We're really going to have to wait and see what the rest of the markets are producing. But on the long term, I'm still rosy bullish. Right? right? So anytime we're charting these short-term time frames, it's more for education than it is for actually trading production, because it's these long-term time frames that produce the best result, which is between 2018, 2019, 2020. You should have just only been fucking buying every chance that you got an opportunity. And this is where people make the mistake. They buy at, let's say, $13,000, and they watch it come down to $6,000, and then they're like, oh my God, I'm down half price. And instead of buying more at a discount, they don't. And they don't buy more ever. They happen to buy at the top of 13,000. Yet this entire range effectively was a great point of entry for Bitcoin. And that's what you want to pay attention to, is these long-term accumulation strategies that yield the biggest results. And in the short term, use these patterns for trading and pattern recognition to increase your chances of success. So let's quickly roll through here. Ethereum also looking very distributive as well. We went over this the other day. For those of you that are fans of the Wyckoff and Jesse Livermore patterns, here is our beautiful Livermore pattern. And then what looks like a phase 9 to the breakdown. I mean, we could come all the way back down to $500 for Ethereum here really easily. So I would keep on the lookout. If you're in a leveraged position, or if you're in an area that has too much risk, don't be in that position. You know, one of the fun parts about accumulating consistently is that the goal of the strategy is to spend the extra capital that you have that you don't need for years on end, right? And that's really the structure that we saw with Ethereum too, is that you know, between 2018 and 2019, you had a $400 high, and then down like a $150 low. And often people make the mistake of buying at the high and then not continuing the strategy. And had you just consistently continued the strategy for 2 or 3 years, you would have done fine. And even backtrack, you know, had you bought Ethereum at the all-time high of $1,400 in 2018, and you actually just kept accumulating on the 11th of every month effectively, you would have killed it, because your average price would have been brought back down to around the $200 area over the course of that 3-year period. You need to start thinking in minimum half decades to decades to get this game right, and then these shorter time frames basically become fucking irrelevant to you. Anyways, that's kind of the point of that one. Let's quickly roll through, look at the rest of the market. Cardano, again, it's very easy to think that this could be the hypodermic top. We've seen tops like this before, where it comes back down. They look kind of similar to a head and shoulders. We call them a hypodermic top. Avalanche is all the way back down to its previous reaccumulation zone at around 11 to 12 bucks. We're showing some strength here, but obviously, if we can't get above that, we could be coming all the way back down to $4 for Avalanche, which is just crazy. I took a secondary position here, and I'm basically going to end up in flat, not with no profit after that. But that's okay. It's the point of the game, is to be able to make mistakes and them not hurt you. Solana as well here, we ran right back up to the top of the point of control, and we couldn't get above it, so we've turned around, and we'll likely come back down here again too, it looks like. So there's a lot of, we're seeing a lot of potential distribution. Now there's not a whole lot more room for downside, but there is still, right? So from $2 to $1, that's still a $50 drop here for 1 inch that could be possible. One actually just came out with a cool new stable coin. It's always interesting to see how these companies are producing ideas. So if you go check us out on Twitter, where was it? Should have had that pre-opened, I guess. Guys, I apologize that I'm not great at producing anything like pre-format. I just kind of jump on and discover where we're going every day. Oh yeah, and the Soul Rise launch too. Where do we go? Yeah, so there's distribution. Should have left Twitter open. Yeah, so 1 inch has the Ichi farm. It's a collaboration with a brand new stablecoin called the 1 inch, which is interesting. I'm gonna try to learn more about that. You can on their blog here as well. Let's see. The Ichi's Decentralized Monetary Authority DMA allows the creation of a 1 inch, which is an in-house stablecoin for easier payments and more lucrative rewards. The 1 inch stablecoin can be used as a stablecoin unit of exchange to pay for operating expenses, provide liquidity, and distribute liquidity rewards. The 1 inch stablecoin will be minted with a blend of 1 inch token and USDC stablecoins minted through Ichi, known as 1 tokens. Interesting. I mean, the stable coins are becoming more and more relevant, obviously, as people try to maintain the value of the assets that perform so well. But again, we could see another 50% downside here for 1 inch all the way down to like a $1.20 pretty easily. We roll through the rest of the ecosystem, and we're seeing that red. Our mercurial play, as soon as we broke the point of control at 88 cents, we dropped down another 50%. And we're kind of seeing this across the board here. Look at FTT. This is another great example where we had this beautiful rising channel. We couldn't break above the middle of the channel here, and we started to turn down, and we fell very quickly as soon as we broke out of that channel. And it does look to me like we're getting more redistribution. Right here is redistribution, bam. So we actually saw a form of redistribution in FTX already, where the trading range itself that we were holding in around the $33 area here turned into that nice redistribution pattern, probably what we'll see on Bitcoin, boom, and then came even lower. And then again, we've got a lot of room for downsides on some of these alternative assets. Like, I mean, FTT has no real support back until 10 or like $5 to $10, right? So we could see a distributional range come all the way back down here. So just make sure you're prepared for that in any way, shape, or form. We went over that in our previous Bitcoin videos when we were at around 42 grand. Said actually right at this point, we said, look, if anyone is too over leveraged, this should be a point where you're getting out of those positions so that you make sure you can sleep at night without worrying a whole lot. Anyways, just a quick rundown for today. Hopefully that's valuable. Again, if you're on a long-term accumulation pattern, none of this stuff is really worrying. It's just an exercise in learning because it reminds you of the full frame view that you can take when you have multiple years to accumulate, and you basically ignore price. And again, for those of you that may have bought what might be the top for this market cycle, just go back in time and retrospectively do the same thing, whether it was in 2017, 2018, or 2019. Even if you were buying tops, as long as you continue to accumulate throughout time, you ended up being able to average or yield an average price, and therefore still make massive returns as long as you were consistent with your strategy. So even though we're studying things that may produce a fair amount of emotion for those of you that don't have a lot of capital, try to ignore that and play the game the same way all the big players play. Michael Saylor bought another $500 million worth of Bitcoin a few weeks ago. And if it comes back down to 20, he'll do the same thing again. He'll just end up averaging what end up might being an average price around the bottom of the reaccumulation channel throughout the entirety of the cycle. And that's a really interesting point, in which we've tried to make every video, which is that even if you buy the top, as long as you consistently execute on your month-over-month strategy, you will do well. So if you're new here, I highly suggest following the simplest strategy that yields the best fucking results. Anyways, it's T with the Arcane Bear. Thank you all for joining us today. Follow us on the social media channel links down below, all that fun stuff. I will be going live with BitBoy here later this afternoon as well. So find us on Around the Blockchain. Thank you for that. I'm going to take a look at a few of your guys' questions while I am here. We see Matt C dropped a super chat. He says, hey man, what's your option or opinion about dollar cost averaging every week versus once a month? Again, if you're going every week, it's the same type of strategy. It could be every quarter. It's that consistency through time has yielded the best results. That's why we do the retrospective studies on Tesla or the S&P 500. It shows that these ideas consistently work regardless of what asset you're focused on, as long as you know the long-term value of that asset. That's why index funds are such a great way to go, is because you don't have to pick the winner. You just have to pick the basket of winners. So that's kind of a fun one as well. Yeah, on the BitBoy show today, we will be going over redistribution. I'll probably make a little bit more of a concerted effort to explain some of the volume and indicators there. Today, I just wanted to go over, again, our macro perspective, which is that your consistency as an investor is really what yields the best results. So just don't get wrecked along that pathway and you'll do great. So whether it's a week entry or a month entry or day over day entry, Matt, it doesn't really seem to make too big of a difference. Although if you are going on the day over or week over week risk potential, it's going to be effectively easier for you to get that consistent, let's say, price point, which is probably more around the point of control anyways. So I don't think it would make too much of a difference. It would be negligible, effectively, not too much to think or worry about. So just a few more questions. We'll dive off. We'll give you guys another 10 minutes here. SkyTep says, should I stay or should I go? If I stay, it'll be trouble. Yeah, again, It's the long-term investors who win this game. Anyone who thinks in short term usually loses. Although there are the random people who do get lucky there, I wouldn't bet on luck. You might as well play the lottery or something. We're not trying to win a lottery here. Normal people can achieve extraordinary results by following these simple rules. So lean into that. Let's see here. A few more questions. Who thinks the bull run is over? I think that is a term of statement, right? So from 2013, when the price dropped from like $1,000 back to $200, was the bull market over or just taking a breather? The bear markets was one of the reasons why we call ourselves Arcane Bear. The bears are the smartest motherfuckers around. They know how to accumulate when everybody else thinks that the market cycle is over. You have 3 years in a bear market that gives you the prime opportunity to just fucking buy while everybody else is bored. There are way too many Moon Boys, Lambo kids, and Shiba Inu to be here still to think that the market cycle is like well on its way. And effectively, those are key indicators that this kind of stuff is we may be going lower sooner than later. Last few questions. Awesome. Yeah, we'll go over redistribution as well. DJ says, hi, I invested most on the top and don't have cash to average down. If you don't have more capital over the next 5 years, I don't know what you're doing with your life. You should be going back to work. Again, guys, even if you worked at fucking McDonald's, you can make this strategy work. Seriously, rewind back to 2018 when we've been talking about Matic and Fetch day over day over day over day. Had you only invested $100 a month in Matic or Fetch, you would have had almost $250,000 to $500,000 extra now from that really small investment. So if you're saying to me you don't have cash to average down, you're not paying attention. It could be as small as $100. You have asymmetric upside. That's so fucking important to understand. So even if you bought it all the top, what you should learn how to do is consistently enter. And even if you only worked at McDonald's, this will work. Let me say that again. Normal, average Joe Blow people can achieve extraordinary results using this habitual pattern. Anyways, we'll leave it at that to you with the Arcane Bear. Thank you guys for joining us today. We're probably going to be able to squeeze out a vlog, maybe even a vlog where we're going to the hot springs. That's kind of fun, right? Sexy hot springs vlog. I like that. And yeah, we'll be on BitBoys show at 2:45 p.m. or wait, 3 p.m. my time. I don't know what time that is. You'll see it come up. So thank you guys all for supporting us. Let's deal with the Arcane Bear. Thumbs up if you like this channel, all the fun stuff that you do. Comment, question, share, it's all blah, blah. We'll see you guys in the next episode.